Hello everyone, this is the Inquiring Humanist on March 13th, 2020, and this video is going to be part one of a several part series on the Chinese Silk Road and its economic and geopolitics implications. Now, I'm going to read from a couple of articles from Russia Today, and the first article that I read from is titled, Why China Believes the World Needs the New Silk Road, Beijing's ambitious mega project to explain. And so I'm going to start reading from this article here. The initiative, which was unveiled by Chinese President Xi Jinping in 2013, envisions linking China with Africa, Asia, Europe, and the Americas through a network of seaports, railways, roads, and industrial parks. The major goal of the 21st Century Silk Road project is to create greater connectivity across the world to promote peace through trade and development. Victor Ga, director of the China National Association of International Studies, said that the BRI initially started as a connectivity project, including financial and power connectivity. There are many projects within the BRI, with more than 100 countries already having signed up for it. Each country has different goods to export. Some export manufactured industrial goods, like the Czech Republic and Slovakia. In Eastern Europe, other countries export more materials, commodities, energy products, and agricultural projects. Gao explained. According to the expert, better connectivity is created by building new roads, railways, and ports. This boosts trade by allowing goods to move faster. Gao said, quote, among the projects completed is the railway in Kenya between Nairobi and Mombasa. It is already operational and has improved the efficiency and productivity in Kenya a lot, not only in terms of moving people around, but also moving goods and services around, quote unquote. Gao said that there are many potential projects on the Eurasian continent itself. Countries like Myanmar, Laos, Vietnam, Cambodia, Thailand, Singapore, and Malaysia will benefit in terms of promoting the BRI, he said. Quote, they will get much better connectivity, including the financial, quote, and that was Gao again. China's trade volume with the Association of Southeast Asian Nations is already surpassing its trade volume with the United States and is picking up speed, according to Gao. Hong Kong-based political scientist Joseph Jing has pointed to the development of cooperation projects with China's international ally, Pakistan. He said that African countries are also interested in participating in the BRI, quote, because they certainly fit in the category of countries needing industrial development and investment funds, quote unquote. Some European countries which have been in financial difficulties may be interested in, quote, attracting investment from China, mainly Greece a few years ago, and Italy in recent years, quote unquote. The project is aimed at satisfying China's domestic needs in terms of using its excess capacity in certain industries more effectively. It provides China with new markets and sources of raw materials and opportunity to invest in Beijing's vast foreign exchange reserve, Joseph Chang explains. Quote, in response to the economic crisis in 2008-2009, China launched many investment programs resulting in excess capacity in industrial sites like steel, cement, and so on, unquote. And that was Chang. Again, Chang added that, quote, now China would like to use its excess capacity in certain industries, its substantial foreign exchange reserves, as well as its technology and experiences in infrastructural projects development, quote unquote. As a growing industrial country, China needs markets and sources of raw materials, the expert pointed out. Quote, China has substantial foreign exchange reserves up to $3.1 trillion, and that's American in US dollars. Part of that was invested in financial papers, treasury bonds in the United States, which are not seen as very productive from China's point of view, quote unquote. And that was Chang again. According to Gao, China is mobilizing all its resources, all of its 31 provinces, autonomous regions, and municipalities to the BRI, quote, eventually for many other big projects involved in the initiative, capital is a very important thing. And when you talk about capital, China is one of the biggest providers of foreign direct investments, quote, he said, noting that it also receives huge flows of foreign direct investment. And now I'm going to read another article that appeared in Russia Today, and the title of the article is New Silk Road, Kenya's massive $1.5 billion, and that's US dollars, railway, funded and built entirely by China. It was published October 22nd, 2019. The so-called standard gauge railway project was launched in 2017. Trains operating on a daily schedule between the port city of Mombasa to Nairobi have already moved up to 2 million passengers. The second section, a 120-kilometer line of China-funded railway connecting Kenya's capital, Nairobi, to Naivasha, a town in the Central Rift Valley, opened last week. Kenyan President Uhuru Kenyatta was on board the maiden journey. Phase 1 and 2 are not the end of the line for the railway projects. In the coming years, it will connect 6 other East African countries, opening the region to international trade. So China's One Belt, One Road project could dramatically increase economic growth in developing countries throughout Asia, Middle East, and Africa. And over the last decade, China has seen a tremendous amount of economic growth and has significantly industrialized. Also in India, the last decade, that country has also industrialized and seen a significant amount of economic growth. And the One Belt, One Road project by China could amplify that economic growth and speed the industrialization of that country. And the middle class in that country may also continue to grow faster. And there's a misconception in the West that developing countries lack an adequate consumer market. However, those countries have seen some economic growth over the last decade, especially China and India, and many of them have a small middle class that would allow them to have at least a small consumer market in those countries. And I'm going to quote a couple of facts from a book called Africa Rising by Vijay Mahajan with Robert E. Gunther. And I'm going to put the title and author of the book in the description below. But this book is basically about how over the last couple of decades there has been a lot of economic growth in India, and over the next few decades the markets in Africa could prove to be a valuable business opportunity to companies and businesses in the West. And so now I'm going to quote a couple of facts from page 30 of this book. And it's here on page 30 that Equatorial Guinea has a gross national income per capita of 8,250, and Libya has a gross national income per capita of $7,380. And again, those are both in US dollars, and that was in 2006. And to put that in perspective, that same year in 2006, China had a gross national income per capita of 2010 US dollars. So some of the countries in Africa have a larger gross national income that could eventually lead to them having more economic growth and development over the next few decades. Okay, goodbye and God bless.